try and understand how some of our analysts and researchers are looking at the markets. We have Ruchit Jain with us, who's the lead researcher at 5 Paisa. Ruchit, how are you looking at the benchmark indices especially, and if you can also highlight a bit on the mid and the small cap on the broader markets?
Yeah, hi, very good afternoon. Well, if you look at last 3-4 trading sessions, the data was already indicating that we could see some sort of correction in the short term. So when I talk about the data, I'll just highlight the FIS positions. Last week when the monthly rollovers were there, they had rolled 8% of their positions on the long side. And if you compare it with the entire last series in the July series, then they had about 68 to 70% long positions. So compared to 70% longs, they just rolled 58% of the positions on the long side. And in yesterday's trading session, they added few shorts as well, due to which their long short ratio came down to 51%. So this was clearly indicating that the data is neutral. Not much buying interest has been seen from the FIS front with the index futures post expiry, and the mid cap and the small cap index were too overbought. And usually, whenever we see such overbought readings, a corrective phase comes which relieves the overbought setups. Now, so that's what we were expecting, and that has played out today. But primarily, we are not looking at it as a change of the trend, but this is just a short-term correction within an uptrend. So for the near term, some volatility could be there, considering we have the expiry as well tomorrow, and 19,600 and 19,700 call options have witnessed significant amount of writing in today's trading session. So from a day or two perspective, I think upside should be limited from here on. 19,600, 650 would be the resistance to watch out for. And on the lower side, market would try to find support somewhere around 19,400 to 350 range. So I think market would trade with higher volatility within this range. But yes, mid caps and small caps could see some relative underperformance or some more correction before resuming its uptrend. So if you're looking from a day perspective, then better to stay away from the high beta names. But yes, for medium-term investors or traders, I think this decline would bring a good opportunity to again buy stocks at lower levels.
This is Snehi also joining in the conversation, and the markets were painted a deep shade of red today. But among this downtick, are there any winners that you're still spotting, and what are your picks for us today then?
Yeah, so generally whenever market turns volatile, then defensives come into focus, where traders try to take positions in the defensive names rather than going with high beta names. So I think some of the selective FMCG names would continue to do better. So Marico is one stock which is on our radar, which has given a breakout during last week from a long consolidation phase, and the previous breakout level is now acting as a support on declines. So I think one can go long on Marico from a trading perspective with stop loss below 545 for potential targets around 600. And rather I would just advise to stay some light on positions, and when we get dips around that 19,400, 19,350 range. So ideally that should be good levels to do some kind of bottom fishing in the markets.
Very interesting time, Ruchit, but we'll let you go on that note. Let's quickly move on. We